Happy Monday, traders. It's 8:01 a.m. Chicago time. This is episode number 1723. Thanks for joining me today. It's 8:01 a.m. in Chicago. Back in Chicago. Yes, the broadband is working perfectly. And if this thing kind of craps out, it's basically YouTube's fault. But could have been my broadband connection when I was away last week. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance not necessarily indicative of future results. This morning, the markets had a pretty wide range in the overnight session. The position, the overall sentiment. The overall sentiment appears to be leaning towards risk, but we are still inside of Friday's range in the ES and pretty much across the board. Friday's selling was kind of interesting. I wasn't here for it. It was a travel day, and therefore you were gifted with an 85 point drop on the in the last half hour. Um, so that's where we stand this morning. Um, the leader this morning is the Russell, up 20.6 points, 1.84%, followed by the Nasdaq up 102 points or 1.36%. The S&P is up 31 points, trading at 2555, 1.23%. The bonds are up two handles and six ticks. On price from settlement up 1.22%. The Dow is up 217% or 217 points or 1%. And the dollar's up as well. The dollar's below 100 again. The laggard today is crude. Crude took a dip on Friday and tagged the 20 handle again, down 5% or $1.13. Crude is incredibly cheap at this point relative to where we were about a month ago. Gold has rolled to June 2020. Gold is trading at 1644, stable in this region here, down $9.60 or 0.58%. So that's where we stand coming in. Again, a slight shift to bullish, but we'll talk about that in a minute. I do not believe this is the stance. This is going to last here today. A lot of indications from the way we closed last week that tell me that the market is on is likely to see its next leg down this week. So that's where we stand this morning in terms of the calendar and what's planned. One of the bigger numbers came out overnight is business confidence in the Eurozone came in at negative 0.2%, which is much better than negative 0.6%. Great Britain's GFK comes out this evening at 6 p.m. Eastern. The U.S. has pending home sales at 10 Eastern. And that's pretty much it for the critical levels, critical releases on the calendar. Actually, at 9 p.m. Eastern, we have MBS manufacturing PMI from China. The forecast is 44.2. The prior is 35.7. Look for that. So that's where that is. I'm not going to do a review of Friday's Trader Bite simply because the stream completely crapped out on Friday and didn't actually produce. So there's nothing to look at. However, I'd like to take a look at what we did in our review segment. I'm going to use the 6-tick Renko for this simply because I can fit it all in here. Actually, let me just kill these fractals. Create a button for these and kill them. So this is the action on Friday. What we saw on Friday was a market that opened in range right on the edge of value with an open auction. This is a very clear example of why we use the opening swing, which I don't know where that is right now, why it's not showing up. But It's a very clear example of why we use the opening swing. We want to see what kind of action we get on the break after the first swing up or down. The first opening swing was inside, and then we busted through to the upside, busted through to the downside, and we went right back into the range here. What Friday was telling us is just complete balance. I mean, it was very, very choppy trade. We ended up building a nice balanced profile at this point, and then we extended the range up. And what do? We come back to the mid. So this is a setup for me, right? For those of you who've been around a while, know that I'm monitoring for this. We have an impulse up, we have a setup at the mid, and then it gives us a pretty decent rotation, about 10 or 12 points, whatever that is, 32 to 45, so 13 points before it fails back through. So by then, scales should have been achieved, and we take this back to scratch. It looks like it's failing through. It pushes through mid, the point of control at the time, and VWAP. Total balance pulls back to mid right here, and then tries to extend farther because we have what is the seemed like the beginning of a new impulse down right here, and then it reverses to the other side. This is the kind of thing that chops people to pieces. So I wouldn't be surprised if many here listening today saw a pretty bad Friday, and saw themselves get chopped to pieces. We just have to be very careful about identifying balance early on. If you don't identify balance, I don't care what you use, and maybe I'm wrong, but I don't care what you use, whether it's RSIs or Williams R percents or CCIs or MACDs or momentum indicators of any kind. If you don't identify the market condition, it's very, very hard to decide which kind of tool to use to trade the market. There are two conditions that the market exists in. The market's either in balance or it's in price discovery. In other words, it's either going back and forth and forming balance, and this is why we build a profile. And one of the best indicators of balance early on is not only an opening swing that is very visible and goes both ways, but also that the market is building the most volume right in the center. So what we end up having in that situation is the point of control, the developing point of control in the first hour, let's say, the developing point of control, mid and VWAP right on top of each other. That's a sign that we need. If we're going to trade, we need to use our mean reversion kind of indicators, which is like a MACD crossover for some. For me, it's just a market that explores, fails using order flow, and then rotates back to the middle. And so what we have is a market that's basically not able to move away from consensus that is being built that morning. I do not pay much attention to the point of control until the first hour is up. But once the first hour is up, as you can see here, we could draw a profile around it. Let's draw a profile around this. You could see that the point of control, which is this maroon line here, the VWAP, which is the cyan, and the blue line is mid. You could see that they are on top of each other in here. And that to me says stay away from breakout trades. At some point, as it compresses and balances, it tends to push directionally. So we go from balance to imbalance, and that's what happened with the first impulse. But the balance was too attractive. Later in the session, what we end up with is a market that pushes to its key target, which is the point of control right here at 85. It goes to 85 and gets tangled in there, and then ultimately tests 2600, which is the century figure and the next big magnet. And then what we see is a market failing to hold those prices. A couple things to note from last week that I noted in the Convergent Head Trader channel. The entire week, last week was spent one time framing up, meaning on a day-to-day basis, we got higher lows. The market is discovering, or the trend last week was upwards. We only pay attention to higher lows on a trend up and lower highs on a trend down when we're one time framing. The second is that Thursday, this broke the prior week's high at 25.4850. 25.4850, which is down here where we are now, basically 25.4850. Excuse me. It broke up there and it ended up closing above, setting us up for a continued run higher, which was what I was expecting on Friday. But what we did is we ended up gapping down quite a bit on Friday, and pushing, creating this dislocation between where it closed, which was very bullish. It ended up putting in a higher high on Friday in the overnight session, and then we end up gapping down below value, or below the point of control on Friday. But overall, it was quite bullish all week. Friday attempted to test that high and failed just above 2,600 and closed inside of the previous week's range and what was an excess high. I'm reading this as an excess high here. Everything above the overnight high, everything above approximately 25.65 looks like an excess to me on the market profile, which sets up a bearish continuation lower today, potentially, or higher potential. Friday also pushed through the 1 vol sigma, so we basically pushed up outside of the normal closing bands, but ended up coming all the way back and closing inside of the normal closing range that's been projected. And so now what we have is a market that has checked upwards and closed right where it opened, right around where it opened on Friday, giving us this well, let's draw it. It's a candlestick that's full with a tail with a wick that's really high up top and really small down below. This is basically what we ended up with on Friday, and everything above here is an excess, is basically too expensive. Again, 25.65-ish appears to be telling us that the market's too expensive. To me, it would seem like the easier path is lower. This is what it looks like to me, but we'll see where the market leads today. The overnight session ended up recovering a little bit. We open in a gap down. The numbers are just awful out of New York and some major cities, and help is still not on the way. There's still problems with personal protective equipment for medical staff, ventilators, things like that. The situation is expected to get worse. And as I told Convergent members, family members in the medical industry, doctors, surgeons, and so on, and they're anticipating across the board, they're anticipating the numbers to get much worse this week, and they're expecting to peak out later this week, early next week before we start to stabilize. So the market is likely to price that in, I would anticipate, but who knows? The overnight session tested the beginning of the excess right here at 25.65. But overall, the overnight session pushed higher until the European Open, which is right at the peak. The European Open sold off immediately, and now we're walking back up. What we had earlier is a double distribution profile overnight. The volume has let up quite a bit in the overnight session. We haven't seen 400,000 or the 400,000 handle in quite some time. So the action has slowed down a little bit. I want to remind you also that tomorrow is quarter end, and generally we see some pushes back and forth on quarter end. Keep that in mind. April starts on Wednesday, April Fool's Day. And what we have in the overnight session is a market that's above the mid, above VWAP, which contradicts the expectation, at least in the short term, that the market's likely to roll over. That's barring news. Let's take a look at the order flow. Looking at the overnight flow, the market has really done a good job of pushing up against the offers. So you can see the market kind of taking out offers, big offered areas here, 25.50, 25.60. It's squeezed pretty well. Not seeing, this stuff that shows up after the low is not important, like down here. But overall, some pretty decent activity in terms of participants actually taking positions and bidding out the market, bidding or offering out the market at key areas. We don't have one of those maps that looks like this, where it's just like little flack or little particles everywhere. It looks pretty steady. Now, looking at the full depth here, let me zoom out a little bit and show you the big picture. A lot of action overnight. Looking at the full depth, let's bounce down. You can see there's quite an offer above the overnight high. It's been stable. It's been sitting there at 25.70 to 75 for the entire session. Down below, 24.50 is expected. It's a mid-century figure. 24.40 is also well bid. What we have is a market that's got action. It's got action on both ends. It's really playing. We've got participants that are positioning on both ends, which tells me that there are participants holding positions into these levels that they're bidding out or offering out, and it's likely to be a pretty decent two-way auction, where the market is likely to participate back and forth, and we should see some. We're likely to see some pretty decent back and forth action this morning. In terms of what's expected, let me see. In terms of what's expected for today, I want to take a moment to just make a quick announcement. I'm very excited about this. EdgeClear LLC is going to launch this week. This is a brokerage that I founded. It's been a long road to getting approved, but we're here and we're likely to launch here later this week. You can find it at edgeclear.com. I know I'm using this channel to this stream to promote it, but this is something. This is a venture that I'm fully doing with the help of a superb team of brokers that many of you will recognize: Max Timmons, Ian Blanky, and Kevin McGee. We're all part of the team, and we are ready to roll. So would appreciate your support. Later this week, we're looking to launch this brokerage, and we anticipate that we'll be able to satisfy the needs of pretty much anyone here that's trading futures. Again, futures are not suitable for all investors, but if you do trade futures, I'd love to get your support. Anyway, now that shameless plug is done, here we are on our planned play for the day. So what I'm looking for today, the market's, the point of control is underneath this. I'm expecting an open auction in value in range. I'm looking for the market to test up into that overnight high. I'm looking for it to poke, and then I'm looking for an impulse down that closes the point of control. Consolidates, and then starts to move down. That's what I'm looking for today before the bounce. So the primary scenario is to stalk the push up and see what kind of action do we get on the way up. We're kind of seeing this sort of play right now. We're kind of seeing this kind of play in the volume scope right now where it's pushing up and it's having a really hard time continuing the squeeze. We just got it up to 25.63 here just recently. My my volume scope screen is not working properly, but again, open auction that pushes above the overnight high. I'm looking for an impulse down. It brings us back to the point of control, and then I'm looking for price discovery lower before the bounce. That's scenario one. Okay. So my job is to look for how it treats higher prices this morning, and if it's able to advance on higher prices, or if it fails and turns over. The secondary scenario is an open auction that pushes up immediately and then tests down, sits at the point of control, looking for value low here around the 25.20 area, and then looking for the market to consolidate in this range for a while before it starts to drift up. This scenario here is likely to squeeze a lot of people. It's likely to cause some damage to those folks who saw the market fail from 2605. The target becomes 2600, and then we start to push towards that 2625, and we have a market that's ready to push higher with a little more confidence. I do believe there's more bad news coming in terms of COVID-19, but we'll see how it plays out. Again, we're opening in range and value. I'm not going to put scenario 3 and 4 up there, but they could happen. This is where we stand today. Good luck, and I'll catch you tomorrow morning. Take care.